basically flat, but the yield curve is up ever so slightly, steepening just a tad. And then energy, as oil is simply surging, the top sector on the day. Both Chevron and Valero are two of the big movers for energy today, John.
Abigail, thank you. Right now, the only excuse you need for that rotation, the only reason, the vaccine news from early this morning. Coming up, markets gearing up for a big week of economic data. Retail sales, the focal point, coming before the opening bell on Tuesday. That conversation up next with Washington Crossing's Chad Morganlander. From London and New York this morning, a very good morning to you all. This is Bloomberg.
$1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
This is Bloomberg's The Open. I'm Rishika Gupta, live in the principal room. Coming up at 10 a.m. on Bloomberg Markets, Stefan Bancel, Moderna CEO. This is Bloomberg.
Many consumers are in a very good spot. There's a ton of cash on the consumer's balance sheet, and there's a lot of pent-up demand. This is a very different mentality, and this is a very different situation post-recession than we've seen in the past. People have money, and they want to spend, and they can spend, and I think they're going to.
Chris Harvey of Wells Fargo expecting the consumer to remain healthy ahead of a big week of economic data featuring tomorrow's retail sales for October. Steve Englander of Standard Chartered, however, remaining wary of climbing virus cases, saying the surge could prompt the Fed to act sooner, writing the following. We see a good chance the FOMC moves even before the scheduled meeting if the virus surge leads to visible deterioration in economic and market conditions. For more, let's bring in Bloomberg's international economics and policy correspondent, Mike McKee. There's an outlier call, Mike, from Mr. Englander at Stand Chart.
It is, and I'm not sure why he thinks that's going to happen, because if you look at what's been going on, we have seen some deterioration, but we're not seeing the market fall apart. You look at what's happened with spreads, and they've tightened. So we'll have to keep an eye on that. But the way the market is trading, it's hard to see them going crazy, even if we get some disappointing numbers this week, and there's a chance we could do that. You mentioned the retail sales numbers. They're forecast to come in a little bit lower than anticipated, and we'll also be watching tomorrow industrial production. How's manufacturing doing? Wednesday, housing starts should be good because interest rates are still very low. And then Thursday, I know, John, you set your clock for Thursday, and jobless claims, also existing home sales. Now, those retail sales, this is going to be an interesting question, because you were just talking about how the consumer has a lot of money, but are they really going to spend it? Or are they going to start holding back because they're afraid of what happens with the pandemic? This is the retail sales control group, the part that goes into GDP, and the anticipation is it will be much smaller than of an increase than it has been in recent months. We're going to be watching this week as well the alternative economic indicators, the numbers that we've been watching in terms of retail store traffic, in particular, the purple line, but also you can see open table, the white line down a little bit, and air employments are kind of flat at this point. This is where we're really going to look and see what's been going on. And of course, the most important number of all that we follow every week, the COVID case rate, which is expanding exponentially, down a little bit over the weekend when we get less of a report on what's been going on. But people are going to be caring about this as perhaps the most important economic indicator. Whether that balances out against the virus vaccine news we get is going to be how probably we see this week.
Mike, thank you. We've gone from 77,000 cases a day in America at the start of the month to something approaching 200,000 daily in America. Just unbelievable. Michael McKee there on the data for the week ahead. We'll catch up with Mike through this week. Retail sales and claims coming as this week grows a little bit older. Washington Crossing's Chad Morganlander recommending investors tilt their portfolios towards a post-pandemic world. He writes the following: expect retail sales and consumer spending to be strong next year. Employment trends and household credit growth will be well above expectations. We are overweight risk with a focus on high-quality value companies. Chad joins us right now. Chad, help me answer this question. What is the difference between a pre-pandemic world and a post-pandemic world?
So we are at a point here where investors are anticipating where economic trends will be 12 to 18 months out